Hello traders, hello everyone, my name is Grega and welcome to new video update. It will be a quick one here for viewers on YouTube. So if you're watching this on YouTube, make sure to subscribe to our channel or leave me any comment, any questions below this video. So we just finished these updates for today's European sessions on cryptos and also on the currencies and other global markets that are driving or are important for the overall outlook. So what's going on today, or what I will be talking about, is actually I will focus on dollar, Mexican peso, and the S&P 500. As you know, we have plenty of important data this week. Later today, we have Powell, who will try to give us a little bit more of details of what they may do next. Keep in mind that we have seen recently that the US dollar came to the downside, which may not be in interest of the Fed, because, as you know, if they want to fight the inflation, then obviously weak US dollar could prevent them to bring down the inflation. In fact, even US yields came down quite a bit. So it looks like that traders, investors, based on the recent price action, they are seeing like maybe that the US won this inflation war, but obviously this is still far from over. So in my opinion, we just have to be careful, have to be aware that maybe Fed will try to remind us that they have plenty of room to lift the rates even higher. However, there will be obviously the recession risk most likely in 2023. Now, since we're talking about the US dollar, I want to touch, and the US yields, obviously, I want to touch the S&P 500, since we know that reaction of the US dollar has an impact on stocks. So what's going on here? Well, I still think that very big pullback from all-time highs can be a corrective. Okay, I know that this maybe is not in line with current fundamentals, but usually when you see something at some very extreme levels, like if you see maybe the Fed members that they are keep repeating, they will be higher, they will be increasing rates to even higher levels. Well, maybe at some point this cycle will come to an end. If just something is just too obvious, well, you just have to be aware that maybe there will be a different situation in the near future. Also, keep in mind that back in the mid of 2021, they were repeating it, that rates will stay low even through 2023. And they were saying that inflation is transitory, and you can see that there was completely opposite side of this. So I also think that Fed will make a few more hikes, but then will possibly slow down, maybe stay neutral somehow, and this could also mean that the S&P 500 could be holding the supports. So looking at this, I think that this can be a way for maybe even some other degree of the corrective wave. But important is that so far we have only 3 wave decline from the high. That's the 1 wave count. Okay, so this wave count shows that this could be an ABC correction, with the price recently bottoming above that trendline support and came quite nicely to the upside. So far we haven't seen a breakout yet, so I will not say that we are now back in a bullish mode, because we are not. Clearly, we are just keep consolidating here. So as long as we are trading below this upper trend line, there is a chance actually that we will continue back to the downside. So if you are looking for any kind of a long entries, any kind of a Christmas rally, well, just keep in mind that you want to see probably this trend line to be taken out to make sure that price has changed from bearish to bullish mode. Okay, also, as long as we are below the trend line, I'm also keeping an eye on the another interpretations, which is actually the ABCX ABC formation. It's a complex correction that can be still ongoing. Notice that I also have some time projections here, based on the recent corrections measured from the lows, and you can see that we are currently at a very critical time here, okay, at a very critical trend line. So again, it would be too soon to say that we are back in a bullish mode. I'm just aware that either can happen here, and if we suddenly fell, let's say, back below 3,800, I think new lows will be in the cards, and then maybe we bottom at the end, not at the end, at the start of 2023. If we'll see a break to the upside and potentially finish December maybe above 4,200 or maybe around 4,400, then I think that more upside could occur. Okay, so you really have to be nimble and very flexible here, because after all, we want to see or maybe have more details of what Fed may do, because that's how maybe speculators will try to make their decisions. So it's very tough situation here on the SP 500, unfortunately. Maybe European markets are much clearer. I mean, Stocks 50 and DAX are much higher. They are doing much better. So if you want to be long on some of those indexes, maybe watch German DAX on pullbacks. I think that this one it can be much more attractive. Now also let's take a look on dollar Mexican peso. Why I'm covering this one? Because I made a pre-video time a few weeks back. I said that as soon as we will see a bottom on Aussie, Euro, Pound, Mexican peso should break the supports. Okay, because why? Because Mexican peso was doing quite well, even when all of those currencies, Pound, Japanese yen, Euro, CAD, when all of them were very weak versus the US dollar, still Mexican peso was doing quite well versus the US dollar. You can clearly see that there was just ongoing consolidation here for the last 12 months or so, and now finally we are breaking here to the downside as soon as those other currencies finally bottom. So you can clearly see this on the correlation. You can I have obviously, there's the inverted scale. This is dollar Mexican versus Mexican peso, and then on the top I have inverted scale of Dixie, Aussie, NOK, and even Pound. Okay, so you can clearly see that there was a very strong reversal. So it looks like that those other majors are now trying to be back in the bullish sequence here. And obviously what I expected is that Mexican peso will just break through the supports, because it was doing very well earlier this year, so it was just a matter of time when this one will come to the downside. So what's going on now? Well, we are seeing pretty nice breakdown here, coming down from a triangle, and looks like that we could be targeting these pandemic levels here back from 2020 that I also talked about in our past free updates. And then you have a very big level. Let me switch to this one. You have a very big levels here, which is actually this one. That goes back to 2017. So this one is also pretty valid. So I think that 2023 we could see more weakness, but we know that markets will not move in straight line, right? Market will always try to move in one direction with and then make a pullback. Okay, that's just how the cycles works. Nothing moves in straight line. So why I'm talking about this, because notice that this recent breakdown, okay, can be a fifth wave of this 5-wave cycle when looking from October. So actually that's when this breakdown, this bearish leg started to unfold. So since we can count 5 waves down now, I would be very careful. You know that in Elliott waves theory, or in sentiment, I would say the market moves in 5 waves, then makes a 3-wave setback. Okay, so now when we have seen such a nice and extended move to the downside, just be aware that maybe this Mexican peso is maybe in overbought conditions. So if something is overbought, or if something is at extremes, even on a smaller time frames, just be aware that there can be slowdown or pullbacks. So I think that these pullbacks could occur. Watch out this trend line. If we break this trend line, I think that we will see a 3-wave rally. So where you will see this 3-wave rally going? Well, normally when 5-wave movement, 5-wave drop is completed, the market will make a 3-wave retracement back to the area of a former wave 4, even better back to the termination point. So where is that? Well, notice that here was one wave 4, around 19.60, and then you had also wave 4 of 2 lesser degrees here at 19.63. So this whole zone, in my opinion, is very, very important. So even if we break this trend line, I would not be seeing dollar Mexican peso going into the bullish mode, but only into a corrective phase that could extend a little bit higher. So I think that there can be a period of slowdown of consolidation before we see a new leg to the downside, which in my opinion should stay in play here as long we are trading here above below 20.60 level. Okay. Also watch this very big head and shoulders pattern. We'll notice that this trend line was broken, potential neckline, and if we retest this neckline, which occurs quite often, then this should be around 19.62, and this is exactly where I highlighted and pointed out this resistance for the upcoming rally around that fourth waves. Okay, so traders, thank you very much for your attention. Now we got a few requests for Black Friday and Cyber Monday discounts. However, this were gone, so now we still decided to open a new offer till the end of the week. Buy 1 month, get the second one for free. So if you miss those offers, maybe that's a new chance to join our premium services. Traders, thank you very much for your attention, and once again, if you like this video, please press a like button below this video on YouTube. Bye.